Hello, good afternoon. Warm welcome. Let me check our mute. Yep, good stuff. So we're good to go. Welcome to the live trading hour brought to you by the Live Trade Room, where we'll put together our trade plan for the US Open, which the cash markets are due to kick in about 15-20 minutes time. So we've got a bit of time to get set up. We're looking for high probability trades, not just across the foreign exchange markets, but also the commodity markets like gold and oil, and also your global indices like your S&P, FTSE, DAX, Nikkei, and things like that. Okay, so without further ado, then we do have this multi-asset class view of these markets. Please take a brief moment to familiarize yourself with our risk warning currently up on screen. Of course, be mindful of the risks involved in trading these financial markets. Without risk, there is no opportunity for return. But it does require, a high degree of focus when engaging with markets. If you want to have long-term, if you want to be in these markets for the longer term, you need to adopt that kind of consistent approach to trading markets. Okay, so the first thing we do just before we make some trading decisions, of course, is to just be mindful of the news events. Is there any major news event that's likely to impact and rock these markets? And this time tomorrow, we've got a very, very significant news event. We've got non-farm payroll, so we'll see how many people are in employment in the US, and we'll see how much money or if there's any wage inflation. So are people getting paid more or less? So we'll have a look at the unemployment change number, the unemployment rate. We're expecting to see an improvement in this, and that would be in keeping with our understanding that economies are reopening across the United States, and as a result, more people are going back to work. Now, there's a couple of barriers to people going back to work, but nonetheless, we should be seeing an uptick, you would assume. Last month was a very, very significant miss. If I just shared a chart here with you. Yeah, last month we saw it's quite difficult to see. It's not that easy. Okay, so we were expecting close to 1 million jobs being added to the US economy last month, and we saw 266. So 266,000, may I add. So that's very much in keeping with pretty much a standard non-farm payroll number, but we're obviously not in standard times, and we were expecting a lot more people coming into the workforce in the US. I'm looking at a few charts off screen, so we'll have a quick look at those in just a moment. But the reason why I'm talking about tomorrow's news event, and we've got the Fed chair as well, and Christine Lagarde due to speak. So when you get central bankers talking about financial markets, the markets listen very carefully. So we've got this inflation story, which the Fed and central banks are saying it's kind of a little bit more transitory, that it's all in hand. There's nothing really to worry about. So we'll see how that plays out. And of course, if the more people are in employment, they'll have more money in their pocket. And if wage growth is increasing, you can imagine the impact that has on prices. So, if there's more demand for things, then prices generally go up. And therein lies the inflation story. So a bit of a strange non-farm payroll last month. We'll have to wait and see what we get this month. But what we do have now in about half an hour is the ADP. So this is the prelude to the non-farm payroll. So this will give us a very mild indication. And I say mild because last time we had 742,000 with the ADP number, and the non-farm came in at 266, so quite a disparity between that. And what it's saying to us is that these numbers are generated by consensus across a large number of economists.
Are advising its other members to gradually lift Japanese travel restrictions.
Okay, I'll just turn off that Squawk service there for just a moment. So we've got a non-farm payment number. We've got a disparity really between the expectation for these numbers. We're getting significant misses across many different categories like unemployment and things like that. So we're a little bit up in the air, to be fair, with regards to some of these data events, and it used to be a lot easier to actually anticipate what's likely to happen. With these non-farm payroll numbers, we could literally get any particular number. So we've got to sort of be a little bit nimble mentally. We've got to have a little bit of sort of mental dexterity about these markets and keep a little bit of an open mind. So just to recap, we've got ADP numbers at 6:45. We'll do a little bit of analysis into those in just a second. 1:30 we have the unemployment claims number. There's only sort of very, very mild improvements, but an improvement nonetheless would obviously be a positive. We've also got the services PMI. So this is it's an index based on surveyed purchasing managers. What we're looking for, as with many of these sort of manufacturing and services PMI data points, is the deviation. So a lot of the markets discount these sorts of potential forecasts, and if you get a strong deviation of that number, then you're likely to see the market react accordingly. So if it's positive, then we're likely to get a little bit of a boost for the dollar, and if it's negative, we're likely to get a little bit of a negative reaction. So that's what we'll be sort of gearing up for. And anyone trading crude oil, we've got crude oil inventories at 4 p.m. UK time. So a few bits of news today to try and navigate, but tomorrow is really the very significant session. So we are very interested to see where we're at with these markets. So without further ado, I just want to share just quickly the bond markets. We're in this sort of sideways moving pattern. So no major sort of issue right now with regards to the bond markets. Good afternoon, RK. What will happen to the euro dollar? So let's get in and we'll have a quick look at that right now for you. So this is basically our trade plan. We've been looking for uptick we're looking to get into the Japanese weakness trade. So we've been speaking a little bit. Fantastic. That's great news. You're very welcome to join us. We'll be here live every day at 12:30. So if you can join us, fantastic. We'll talk you through all the opportunities as we see them. So we're currently trading the dollar yen to the upside, the pound yen, and the euro yen to the upside. So we're actually trading yen weakness. Now, we've got a very interesting bit of price action here with the S&P. This is one of the other markets we're looking at. We're also looking at gold and crude oil. Crude oil to the upside, gold also to the upside, and you can see we've had a pretty significant reversal. So some of these markets been in a strange little place for quite some time. Just looking at the time here, if I can bring this up on screen properly. So we're not quite there yet in terms of the US Open, but look what's happening here. What I'll do is I'll just get this little pen up. So we've been in this little sideways moving pattern now for 8 days. 3 days ago, it was looking positive that we were going to get an impulsive move. We got a strong level of resistance up at these highs, and we got a strong rejection in the end. And now this market is actually pushing lower. So yesterday we weren't really able to do an awful lot with this market, but now we're extending lower. So we can go in and have a quick look at this and see how this opportunity stacks up for us. Let's look at a slightly bigger time frame. So we do look at bigger time frames. the bigger the time frame, the more confidence we have in the trade. So we've got this little sell here, and we do like this below the 41.82. So we're going to make a call to get into this trade. So we'll get our platform open. We're looking for a sell trade. Now this comes with a little bit of a caveat. We're going to look to sell the S&P 500. If we look at the remaining, at the other stocks, they're all experiencing a very significant move to the downside, and we do now have some capital coming in, US capital coming in from in the US with the cash open now in just a moment. So if it's all right, just bear with me just a moment, RK, and I'll we'll execute this trade, and then we'll have a look at the euro dollar. So this is one of our planned trades. We do want to break out either to the upside or to the downside. There's the euro dollar. We'll come back to it. We're getting a little bit of dollar strength. The reason why the dollar is strengthening is because the indice markets are rolling over. So we've got risk off, which basically means capital's coming out of your equity markets and it's going in to the US dollar. So we're seeing some dollar strength as a result. So we've got an opportunity here to get into the S&P, and we can have a stop loss at the 42, just above that, the 42.19 level. So let's see. I'm just going to take these off screen. Okay, 42. Just bear with me a second while I just take these trades, and you'll see our entry order just pop up in just a moment. With a stop loss around the 42, 19. Okay. We do like this market to the downside. We've been talking about this trade for a little while now, and I'll just discuss the inflation side of the potential impact from in a market like this in just a second. So uh, 42. Okay, so here's our trade, and let me explain what's going on. So this market has been in a clearly defined uptrend. In fact, if I use my square, then I hope we can all agree this market has been drifting sideways for quite some time. We'd have to go back as far as the 24th of May. So we had a false breakout, which you get, which is fine, and now we're actually getting this little breakout to the downside. So we don't really mind whether this market genuinely breaks to the upside or breaks to the downside. We're looking to get in below those levels. So So there's our entry, there's our stop loss just above this high here. Sorry, actually, if we build in our 2 times the spread, hang on 1 second. You see, we've calculated our trade size, so we know exactly how much capital we're committing to the trade. Just a very, very slight adjustment there. So we just want to be above this little high, just sitting in here. I mean, we don't know whether this will continue to the downside. What we might be doing is getting a little bit of a move pre non-farm payroll tomorrow. So we're not really looking to hold this now for 5 days or anything like that. We'd be looking to make some profit maybe today or tomorrow morning. Look to at the very, very minimum reduce risk as quickly as we can. That's what we're looking to do with this trade. It's a breakout trade of consolidation. So we categorize every trade we get into. We explain to our traders what the trading opportunity is, how we trade it. We're using a technical stop loss, and we want to look to get into opportunities like this. So this is what we refer to as a high probability trading opportunity below this level. So that's the S&P. We wanted to get into that. It's a little bit ad hoc just because we've been talking about this little breakout for a little while now, and especially if this is your all-time highs up here at the 42.40. So when people talk about the indice markets, they've been in risk on for quite some time, and now we're just getting these structural failure trades. We're getting prices rolling over to the downside, and we're breaking below these sort of significant lows. This is on an hourly time frame, by the way, and we've got nearly 2 weeks of sideways moving patterns. So what does it look like on the daily time frame? We can sort of summarize that price action really into this little type box here, and we're only talking about a 36 point range in 2, 4, 6, 8 trading days, which is absolutely nothing. If you can if I just share we like to look at ATRs, so we want to see what the average range is in these markets over the last 20 periods. It's a 20 period ATR, and what this tells us is there's a 51, if you add up the highs and lows over the last 20 periods, you'll have an average of about 51 points. Now the real average in this market, it's not that quite accurate right now, so let me be a little bit more accurate with this. So over the last 8 days, we've actually been about a 37 point range. So actually, this is the average 20 period. Over the last 8 days, we're kind of down here. We're kind of down at these levels, somewhere around here. On the 20 period, we're much, much higher. So it just shows you how little volatility is in this market, which is really a good reason why we like. What we're likely to get is the spring effect to the downside. So when you get all of these, this is one of the most traded indice out there. It's the big one. It's the S&P 500, and for it to only trade 35 points in the course of 8 days is very, very low in terms of volatility. And what we're hoping to trade now is the spring effect, the little explosive move to the downside. And let's see if this picks up pace as the US cash comes in to this market. So it'll see exactly what we're seeing. It'll be looking across all of these markets and going, hold on a minute, we're in a risk-off market condition. The stock markets are pushing lower. We're seeing things like AMC and things like that, or your meme stocks getting rolled over and getting hammered today. Might have a look at that in a minute if we get a chance. So we're going to have this news event coming in. I'm going to put on our Squawk service so we'll get a little bit of a market update. Let's go back to RK. I'll have a quick look at the dollar. So we are seeing a little bit of dollar strength. Okay, so one of the major caveats to that is the pound. Actually, we're seeing quite a strong pound again against most of these markets. We're currently in the pound yen, but the dollar is strengthening against most of these markets, against the Swiss, against the CAD, against the Aussie to the downside, and the New Zealand to the downside. So apart from the pound, we are seeing a strong dollar. We're also seeing a strong dollar in the gold market because gold is crossed with the US dollar. So we had been looking for further buying opportunities, but to be fair, we're getting a lot of indecisive price action and a bit of erratic price action as well in this market. So our bias is still to the upside. It's an inflation against, it's a hedge against inflation. Now, what would be better for us is if we got a nice little pullback somewhere in around the 1850. That would be your next leg to the upside. So we just got to be a little bit patient now. Not really going to get involved in the sell. We'd rather it just sell off naturally, find a little bit of positive price action, and then start to get involved in that trade to the upside at that point. Okay, so we can firmly see some strength coming into the dollar. This is very likely to be a bit of price action pre non-farm payroll, which is tomorrow. So let's see what this news result. We're likely to get it through in about 10-12 minutes. So we'll have a look at the and to just sort of brief you, really, we're focusing on. Tomorrow we have non-farm payroll employment numbers. So today we've got the prelude to that. We've got the ADP at 1:15. Is our service on? I think it is. Yeah. So we'll get a little market update on that in just a moment. We'll see how the market reacts. We look at the euro dollar actually, RK. So we'll see how this market reacts to the euro dollar in just a second, and then we're going to very closely have unemployment claims being released as well. Will the euro dollar reach 122.20 today? Okay, so 122.20 is up at these highs. I'll just mark it here. So we're up at that high. Does that mean you're currently buying this market? As you can see on the daily time frame, the momentum is to the downside. So I would be very nervous because the dollar is strengthening across most of these markets.
10 minutes away now until we see the release of the US ADP employment change for May, or a reading of 650,000 expected versus a par of 742,000. We're seeing a range about 300,000 to 900,000. So note here from TDS as they look for the ADP report to show a 500,000 gain in private employment for May, versus again the consensus of 650,000. In general though, they remind you that ADP data has not been very helpful for signalling the BLS data in advance. The differential between the initial BLS private payrolls figure and the initial ADP reading can be relatively small sometimes, but extremely large other times. So not a consistent reading for the NFP tomorrow.
Okay, so to answer your question, currently the market direction is very much to the downside. So what you need to see is some structural failures to the upside. So if I delete this, so what that means is we've got this market is consolidating. So one of the first things we want to do when we look at a market is determine the market conditions. Is it trending? Is it reversing? Is it pulling back? Is it consolidating? Well, the market condition right now for the euro dollar is consolidation. So you get resistance up here, you get support down here. So if I was looking at this and I'd be very nervous about buying or selling this particular price in and around here, because we're in the middle of support and resistance, and it can be pushed higher or it can be pushed lower. You don't really have any edge with a trade inside this consolidation, unless you're scalping sort of 5-10 pips and things like that, which is what some traders do. But we look for a little bit more. We look for moves with momentum, with fundamentals and sentiment behind them as well, if possible. It's not always the case, of course, but we want to try and get the fundamentals, the sentiment, and the technicals in alignment. Those are generally your big trades, and we're prepared to kind of wait a little bit more for those types of opportunities. So in the middle, really, we're left with just a really big question mark. Honestly, that's kind of where we're at. Because we're in consolidation, it's very, very plausible to get this market, reversing, bouncing off these levels in here, these multiple lows. They're all stacking up inside this zone. So we might very well get our bias over the longer term is to the upside for the euro dollar. We, as you probably know, we can get a bit of softening price action prior to that. The other thing that's going against you if you're looking for a buy trade in the euro dollar is what's going on in the indices markets, and these are clearly risk-off market conditions. Capital's coming out of your riskier assets, which is exactly what you're seeing today across all the indices markets. Is a complete retracement of the previous day's moves. And we can look to get into any of these. We're just going to look to get into the S&P for now, and that's going against your euro dollar buy trade, because again, sort of currency markets don't move independently. They're very much connected and correlated to other markets. So what we do is we assess the correlations between the indices markets. We want to see where the flow of capital is going to. If it's coming out of indices, which it is, where is it going? Since COVID, the main beneficiary of risk-off market conditions has actually been the US dollar, and that's what we're seeing again. So you have a few things going against you if you're looking for a buy trade, and we do not. So from our perspective and how we teach traders. We teach traders how to do the opposite of that. We teach traders how to go with the market directions, understand the correlations, which is pushing pressures to the downside. Now, I don't think there's major fundamental news driving the euro lower, but the technicals are definitely to the downside. And we always talk about, understanding, doing your analysis and saying, right, well, the momentum is to the downside. We've seen structural failures lower. The stock markets are risk off. We are breaking below the daily low, for example, or we're below major resistance levels. And what we end up doing is arriving at a decision, which is, we're going to look to sell this market below a certain level. And that's what trading is for us. So we don't have any grounds or reasons to suggest there's a buy trade here in the euro dollar. We can clearly see it's pushing lower. So if we were in a sell trade, and this is just sort of from my opinion, if I was in a euro dollar buy trade right now, and I was sort of day trading, I'd be probably getting out of the trade. So it's one of those where we'd want to cut the loser short. But that decision was probably a little while ago. That decision would probably have been in and around this kind of zone here, where the market, initially took a bit of a roll, and then you get the pullback trade. And now will we get, so this is game over to the downside really, or we'd expect further downside from there, around that 2180 level. So we're not too far off it. So yeah, that's just a little bit of just our thoughts on the euro dollar. Yeah, absolutely, my pleasure, no problem. So looking at the S&P 500, the indice markets are still taking a roll to the downside. We'll have some data out now over the next 20 minutes. So we'll have a look at the major markets for this. So what we'll do is we'll get up.
Minutes ago now to receive the release of the US ADP employment change for May. Again, a reading of 650,000 expected, with orders seeing a range of 300 to 900,000.
Okay, so very, very significant range there. So we'll keep an eye on this. So the gold market is selling off quite significantly. We'll have a look at crude oil in just a moment. Which is not really doing an awful lot just yet. So let's get the euro dollar in here. We'll squeeze it in. So this will give us an indication of what the correlations are at the bottom. So if you don't mind, we'll stick with the euro yen. Sorry, the yen weakness trades to the upside. We'll just keep those on screen. We were looking at a buy trade yesterday in gold, and it failed to follow through. The euro dollar. Sorry, it keeps skipping on me.
1 minute to go now, 1 minute. Just a reminder, possibly a slight delay with the reporting of the numbers from ADP.
I hope you can hear this okay. I'm sure you can. Let us know if not. So let's see if we get these numbers. So what are we looking for? We'd be a little bit concerned that if there was a very significant uptick in the unemployment numbers and the ADP numbers, if there's a massive uptick, it might feed into that inflation story a little bit more. And that will be a big problem for the stock markets. We're likely to see the dollar rally quite significantly. So, so we should have this news out now. Let's see what the number is.
978,000 for the ADP employment change for the month.
Oh, okay, big number.
So again, just repeat that. That's the US ADP National Employment Report showing the employment increased by 978,000 private sector jobs in May, as versus the expected reading of 650,000. Power vision coming through lower of 654,000 versus the prior reading of 742,000.
Okay, so we've got a very significant 50% uptick on the ADP number. So the non-farm payroll is the government jobs number. The ADP is sort of a non-government number. So that's why the non-farm payroll has a little bit more weight in this environment. I don't quite know where they get all their stats from, but they can derive them from slightly different different parts. So it is really designed to be a bit of a prelude to non-farm payroll. And this is a very, very significant uptick. So initial reactions, and like I said, if we got a really positive...
That number from ADP, seeing stock futures little changed.
Yeah, broadly speaking, little changed. You see, there's a little bit of conflict with this report, with this employment change number. It's because stock markets benefit from a booming economy. More people that are at work is obviously good for that economy. The more people buy, but then that just gets offset with the inflation story, which you may be hearing an awful lot about in the markets. So I'm surprised there's such a muted reaction. If you look at the previous numbers, we just zoom in at this level up here. It's not that easy to see, but very much in line with consensus, broadly speaking. So in March, yeah, around that 550 mark. So there's been a gentle uptick. Yeah, so May we're expecting 872 and we had a big miss. And this time we're expecting 645 and we had a very, very significant uptick. So the question now remains, are we likely to see a significant improvement on 645,000 jobs being added to the US economy? The ADP number suggests the answer to that question is yes. So if more people are back at work, that's really, really good news. People have more money in their pockets. They're spending more. Prices are likely to go up. There's the inflation sort of data, and there's a lot of people skeptical about inflation data because it can be tempered and I think there's a lot of tricks that can be pulled to sort of make it look a little bit better perhaps than what it is. The Fed say it's transitory, that it's not really a problem, and yet everything seems to be going up in real terms for all of us. So it's interesting to see the stock markets still maintain its position to the downside. And will this unemployment claims number be a positive number now as a result? Will it be below that 400,000 level? So that's probably what these markets are waiting for. So we're currently in the dollar yen to the upside, the pound yen to the upside, the euro yen to the upside, and the S&P 500 to the downside as well.
10 minutes away now to the bottom of the hour. We will see the weekly US initial jobless claims, a reading of 390,000 expected versus a prior of 406,000. Reuters seeing a range of 345,000 to 430, while the continued jobless claims, 3.615 million expected for the week versus a prior of 3.642 million. We're seeing 3.6 million to 3.68 million. As well, we're beginning the final first quarter readings for US productivity numbers, with non-farm productivity 5.5% expected versus prior 5.4. We're seeing a range of 5.4 to 5.7, while on the unit labour cost reading minus 0.4% expected versus a reading minus 0.3% previously. So notes from TTS as they look to initial jobless claims, noting that the 336,000 decline in claims over the past 7 weeks is consistent with strengthening in the labour market, but much of it can probably be explained by normalisation in the relationship between the claims data and other labour markets. They're looking for a new decline to 380,000 for the week of 29th of May, slightly down from the 406,000, as they have been highlighting claims have looked too high to be consistent with both the layoffs and discharges series in the JOLTS report, and outflows from employment series in the employment report. They suspect the claims have been boosted by a surge in fraudulent applications, as well as relaxation of qualification criteria during the pandemic.
Okay, so it looks like that euro dollar that dollar, should I say, is strengthening. We can see that the dollar is strengthening against the yen, strengthening against the euro. Gold is looking like we're going to see a bit of a move. And that would suggest we're likely to see further downside for the indice markets as well. So So we do have to pack up in about sort of 10 minutes, I guess. So we'll get this more recent figure in. So now we've got the unemployment claims number. So under that 400,000 level would be a positive news event again. So we've had a really positive ADP number, positive unemployment claims. we're likely to see the dollar, continue to strengthen. So there's that strength coming through the market. We just want to hold fire really until we get this the unemployment numbers through in a few minutes. So no need to get sort of too excited just yet.
3 minutes now to release of the US initial jobless claims for the week, with 390,000 expected, and continued jobless claims 3.615 million expected. As well, the US non-farm productivity, the final reading for the first quarter, 5.5% expected, while the unit labour cost minus 0.4% expected.
Okay, so we'll have that news event now in just a couple of seconds.
One minute to go now, 1 minute. Ten seconds. $285,000 for initial jobless claims, while continued at 3.771 million. Non-farm productivity at 5.4%, while the unit labour cost at 1.7. Again, to repeat, that's the US initial jobless claims for the week, coming in at 385,000.
Oh, 385.
Lower 405,000. Will continue jobless claims at 3.771 million. Power Vision loan of 3.602 million. For the final first quarter readings for US non-farm productivity, 5.4%, with the 5.5% expected, with the unit labour cost at 1.7%.
Okay. So a better than expected unemployment claims number and a much better than expected non-farm payroll number. So, some very positive news on the that's very positive news for the US dollar, and we're beginning to see that play out.
So looking closer at the initial jobless report there, and that's the first sub 400,000 reading since the start of the pandemic.
So dollar yen to the upside, we're happy to stick with that one, of course. And the euro dollar, we're just quite close to just breaking beneath this little low here, which is exactly where this where today's low is. So the 21.59, let's go into it on the smaller time frames. Prices are just held up above that level. But if you get in 21.59, you've kind of got a 50 pip stop loss, really, if you're looking with a technical stop loss. The safer place is obviously just 10 pips higher, but you're still looking at a 60 pip stop loss. But that's quite a decent news event for the dollar. So are we likely to see continuation in the dollar strength trade? Yes, it's certainly looking like that now. So these equity markets are still looking lower. So we have a green light to start selling the euro dollar to the downside. Another decent opportunity is the this has been, so we're at the lower end of consolidation. So we're anticipating to see a breakthrough. We wouldn't be that surprised if we didn't get that breakthrough between now and non-farm payrolls tomorrow. So the Aussie dollar to the downside, or the euro dollar to the downside, and you see we're in the euro yen to the upside. So this would be a hedge trade, a little bit of a hedge trade with our euro yen trade. So there's a clearly defined sell trade there below 21.59. I do apologize. We're going to need to wrap this up here. We've got another trading session straight away. So we're still in sort of three winning trades across the yen weakness trades. The gold is pushing lower. There's certainly a viable sell trade there in gold. The market we're going to look a little bit more detail at are the euro dollar to the downside and the Aussie dollar to the downside.
So we're just getting some research note response now from Capital Economics on the ADP report. They say it does appear to pour some cold water on the idea that widespread labour shortages are continuing to weigh on hiring. Nevertheless, they note that ADP's pro-record, meaning that they are inclined to change their forecast that NFP tomorrow will rise by a more subdued 500,000.
Okay, so we've got momentum trades in the euro dollar to the downside and the Aussie dollar to the downside. We'll be looking very carefully at those. Sorry for jumping around a few of these markets at the moment. We still like the S&P to the downside as well. So we'll leave it there. Unfortunately, we do need to shoot off, but we'll be back again tomorrow at 12:30 if you want to join us for that. Major news event tomorrow with the non-farm payroll numbers. We'll also have two central bankers, Jerome Powell and Christine Lagarde, will be speaking. Excuse me. So tomorrow is likely to be a very, very volatile day. We've had a bit of a strange week this week, but we do get that when you trade financial markets. We'll see if we can pick up some more dollar strength though. That looks like it's filtering through. So look, if we wrap up this this broadcast here, guys, thank you very much for joining us. Give us a thumbs up and subscribe to our channel if you can. And you'll be notified when we go live, and we'll be notifying you as well when we'll be producing these little market update videos and things like that, so you'll be able to access those when they go live. So from everyone here at the live trade room, thanks very much for joining us. Take care. We'll hopefully see you tomorrow, and bye for now.